When the pandemic initially gripped the world, desperation ignited for all companies, including startups. Many startups initiated mass layoffs with the perception that their business would suffer. As the dust settled though, the venture capital industry emerged with seemingly insatiable appetite to invest in startups, as the realization that their investees' innovations would permanently supplant historic consumer habits. Despite economic tumult wrought by the pandemic, startup investing in the US reached a high of $130 billion in 2020, with global figures topping $300 billion, a figure second only to 2018's $329 billion venture capital investment. Areas such as fintech, artificial intelligence, digital health, and medical devices dominated deal activity. Each of these industries were naturally positioned to benefit from overall trends spurred by altered consumer behavior. One beneficiary of venture capital's record year was the electric vehicle company Rivian. By capitalizing on a confluence of events like the electric car zeitgeist, it was able to raise $2.5 billion in 2020, marking one of the highest funding rounds for the year. So the importance of venture capital as an allocator of risk capital is unquestionable. And in this video, we will explore the world's most valuable venture-backed startups. Founded in 2012 by Zhang Yiming, Bytedance initially struggled to raise capital, with nearly every venture capital firm denying the company financing. Its idea to develop mobile-first products powered by machine learning technology seemed unaligned with venture capitalists, at least initially. The company's founder envisioned an AI-focused company since its provenance, with Zhang realizing the power of artificial intelligence with the growth of mobile internet and how it would revolutionize the way people consume and receive information. Without relenting on this mandate, Bytedance managed to secure its first round of funding in 2012 by SIG China. Since its first round of funding, the company has gone on to raise $7.4 billion from the most vaunted investors, pushing its valuation after its most recent funding round to $140 billion. Bytedance has grown at a relenting pace. After launching one of its first products, Taotiao, a news and information content platform, the company went on to develop and acquire several other popular products, including its video sharing platforms, Douyin and TikTok. The company's revenue more than doubled in 2020 to about $37 billion. Meanwhile, the secondary market has placed the company's valuation at figures exceeding $250 billion. Stipe was founded in 2010 by two brothers, Patrick and John Collison. The Irish-American entrepreneurs attracted early notoriety for their intelligence, with the two brothers eventually attending MIT and Harvard, respectively. Shortly thereafter, Patrick Collison started a company to help individuals manage their eBay businesses, which was quickly acquired. After this experience, the Collisons decided to devote their attention towards making payment processing on the internet easy and elegant. Stipe secured its first round of funding in 2010, shortly after the company's founding from Y Combinator. Shortly after, Stipe raised additional funding, this time with notable founders Peter Thiel and Elon Musk participating in the round. Considering Peter Thiel and Elon Musk were two of the founders of PayPal, it was not only a significant signal of their support of an upstart PayPal competitor, but also useful for Stipe founders to glean insight from their experience building PayPal. Today, the company is valued at $95 billion after its latest round of funding, as the company continues to invest in the infrastructure that will power internet commerce going forward.
Do you see them both light up?
Inside shut down. Inside boosters.
Yes!
Look at that.
What? Look at that. That's unreal.
Deployed.
And the Falcons have landed.
Founded by Elon Musk in 2002, the aerospace company was one of the projects pursued by Elon Musk after selling PayPal. When inquired about his intentions after the PayPal acquisition, he expressed interest in the space industry, with particular interest in a Mars mission. but initially felt there was nothing for himself as an individual to do, along with the assumption that NASA was actively planning a mission to Mars. Although, upon further investigation, Elon discovered that NASA had not publicly detailed any intention to pursue a Mars mission because an earlier report commissioned by the Bush administration indicated such a project's cost would be $500 billion, which effectively curtailed any discussion of Mars within NASA. Elon felt that if he could galvanize enough support for a mission to Mars by the public, then the government would be impelled to appropriate funding towards an effort to achieve the mission. Spurred by this intention, Elon devised a way to lower the cost of the aircraft and other critical infrastructure for the company to potentially succeed, with one essential exception: a way to compress the cost to launch. Over the course of several meetings, Elon met with experts to assess whether there was something fundamentally expensive about rockets or whether the cost could be improved. After not being able to identify any fundamental obstacle to reducing the cost of SpaceX launching rockets in a persistent manner, Elon had the validation needed to fund and officially launch SpaceX. After being bootstrapped by Elon, the company raised funds from the venture capital firm Founders Fund. Now valued at $74 billion, SpaceX has raised $6.3 billion in funding while achieving monumental milestones, from achieving rocket reusability, being the first commercial spacecraft to take cargo and humans to the International Space Station, to launching the world's most advanced broadband internet service, Starlink. Didi, a mobile transportation and local services platform, traces its origins to two companies that subsequently merged, Didi Dash and Quadi Dash. In 2012, the two companies were founded, with each providing online taxi hailing services. In China, there are two technology companies that cast an outsized shadow over the industry: Alibaba and Tencent. Each company fiercely competes in effectively every technology-enabled industry. And with the launching of the two taxi-hailing services, Didi and Quadi, another battleground emerged, with Tencent and Alibaba providing strategic investments for each of the services to compete. Eventually, the two companies merged, forming Didi Chuxing, as competition intensified with the emergence of Uber as a well-funded rival in the territory. In 2016, Didi announced the closing of a $7.3 billion funding round and merged its business with Uber's Chinese assets. After raising a total of $22.7 billion in funding, Didi is valued at $62 billion. Didi's departure from this list appears imminent, with reporting that the company intends to confidentially file for a US-based IPO targeting a public valuation at $100 billion. Founded in 2012 by Apurva Mehta, the grocery delivery and pickup service was an early pioneer in the industry in which it now leads, commanding a larger share of online grocery sales than even Walmart. After conceiving the idea in 2012, Apurva applied to Y Combinator 2 months late, but managed to convince Gary Tan, then a partner at the startup incubator, to get Instacart accepted after Apurva demonstrated his persistence and the fact that he was a doer, having already developed a functioning app. Demand for Instacart service surged, resulting from the pandemic, with consumers assuming precautionary measures to avoid venturing to stores themselves. This catalyst does not appear to be regressing, with the expectation that ordering groceries online is becoming increasingly preferred by shoppers. After securing funding outside of Y Combinator, the company went on to raise its Series A funding from lead investor Sequoia Capital and has raised $2.7 billion since its founding, valuing the company at $39 billion. With the IPO market exceeding historic precedents, and with companies such as Bytedance speculated to take individual parts of his business public, and with Didi and Instacart likely to go public in 2021, the positions on this list will indisputably change. What is certain, though, is the impact these companies will continue to have on each of our lives, irrespective of their status as private venture-backed startups or as publicly traded companies. Thanks for watching. Until next time.